Hello, welcome to the first video of a series of trading tutorial. The name of this channel is Trading Bootcamp, and going forward, hopefully once a week or twice a week, I will load a short 5 to 10 minute videos. This might be the longest one just to introduce the series, but I will try to put 1 to 2 videos, 5 to 10 minutes long, and show people how I approach technical analysis and how I marry that with fundamental analysis in my trading and investment. Some people um, would categorize how I invest and trade as a swing traders. Um, Definitely not a day trader. Sure, have I made a trade that I enter and exit the position on the same day? Yes, but it's not frequent. So, most day traders make a ton of trade on a daily basis. I don't. There are days that I don't make any trades, and then there's days I might make 5 to 10 to even 20 trades. So it's all depend on the field, the situation. But let's talk about technical analysis. There are many people that don't care about technical analysis. There's a lot of people that follow fundamental analysis. Often, when I turn on CNBC, I hear a lot of fundamental absolutists. That's how I categorize them. People that go on CNBC and say, "Oh, IBM at 150 is cheap. We have a target price of 300, so it is absolutely a buy here." I'm sure what I just said you can apply to many different tickers. That's what you hear. And for them, hey, if the stock is 150 right now, and my fundamental quote unquote analysis show me that it's worth 300, which is nonsense. Okay, trust me. For those that understand analysts and experts on CNBC, price projection target are mostly nonsense. Um, and sure, some of them will throw out, oh, we have go back to the IBM example. Oh, we projected to be 300 in the next 12 months. It's meaningless as far as the price target and the time frame. A year is a long time. Okay, a year is a long time. We try to. Um, it's hard to make an investment decision. I understand for a lot of people that don't have time to invest or trade the market because some people are busy working, have a family, many things. If you are a busy individual that have no time, or if you have time but you hate the market, you find all of this stuff boring, just buy the index fund. It is that simple. Right? Don't waste your time with different mutual funds or whatever. Just buy the S&P 500 index fund. Study has shown over and over again, whether it's 5 years, 10 years, 15 years, 20 years, it has beat the majority of the experts out there, the mutual funds. So 1 year, sure. 3 years, you might find a few mutual funds that can beat the index in a 1 to 3 years kind of time frame. But once you go into a 5 year or longer time frame, it's very hard to find a manager or professionals that can consistently beat the S&P 500 over a 5 years period. There are traders out there, there's hedge funds out there that can do it, but those are far and few in between. So if you hate doing this, you don't have time, you don't care to learn, just buy the S&P 500 index fund. And if you have 10, 20, 30-year horizon, you will do very well. Just put away $5,000 a year for 10 years, and then 30 years later, don't be surprised that you have $1 million. All right, so all right, let's focus on the first lesson today: technical analysis. The way I try to explain technical analysis to the noobs, the new people that never heard of it or don't really understand it, is it's a measurement. It's a measure of psychology, right? It's even though the name technical, in many ways, it explains the psychology. It peer into the psychology of investors and traders, and from the past and project it into the future. That's how I try to explain it. It's not the best explanation I can give, but that's what it tried to do. It tried to look at the emotion, the psychology of the past and current traders and investor and the market, and show you where it can go in the future as far as the price of the stock, based on both fundamental analysis and emotion. Okay, and the market is all about fear and greed. That's why using fundamental analysis alone is not a good tool. In good time, fundamental analysis will try to tell you that, hey, a PE of a stock with a 30 PE is cheap. We're in a booming economy, a booming market. A 30 PE is cheap. But the moment that we have a bear market, right, the same expert will tell you, oh, that stock at 20 PE is still too expensive. Why is that? Why is that? Sure, because it's a bad economy, earning is coming down. It's all kind of reason, okay? But at the end of the day, fundamental analysis doesn't really work by itself. Okay, to me, the best way to invest and trade is to marry both fundamental analysis and technical analysis, because entry points matters. Okay, let me repeat. Entry points matter. Where you buy a stock, how much you pay for a stock, can be a big difference on what kind of percentage gain or percentage loss you can suffer. So to hear someone on CNBC saying that, oh, IBM at 150 is cheap, is a buy. Our target goal is 300 12 months from now. Really? You think 150, hypothetically speaking, you think 150 right now is the best price you can get? What if you can buy at 120? What if you can buy at 100? Would you like that? Would you like to buy the same recommendation at 120 or 100, so that if it does get to 300, your percentage gain is a lot more, right? So just don't take what people say on TV as if they know what they are talking about. Okay, it's sound bites. They are paid to show up to give you sound bites on TV or YouTube. YouTube now is TV too. There's plenty of channels on YouTube that will tell you what to buy, what to sell. Hopefully, with this series of videos, those that follow it, understand it, apply it, can learn to invest and trade on their own and make better decisions. Better decisions equal better return. And informed investors and informed traders will do better than somebody that's just fling things, throw craps on the wall, whatever stick works. For those that don't gamble, in many ways, trading and investing is a lot like a good gamblers. Okay, if you talk to a gambler out there that know how to gamble, they are disciplined. They don't go to Vegas, sit down at a blackjack table, get an 18, and say, "Oh, I feel lucky today. I'm gonna take a card because it's a 1 in a million chance that I will get a 3 to make it a 21, and get a better return than holding an 18, keep the 18, and have a higher odds of winning the hand. That's what a good trader and investor will do. Be disciplined, know the rules, and apply it, right? Because over time, you will beat the market or do very well compared to underperforming trade, invest based on hunch, based on hearsay, based on recommendation from your mailman, you name it. Do your homework. All right. All right. With all that being said, my God, I wasted almost 11 minutes. But all that need to be said. I chose this chart because it was asked. Also, it's a chart that I have never used to draw anything on it. So it's a good, clean chart. On top of that, I also traded Palantir a few times. In fact, I'm shooting this video Sunday, January 7th in the morning. I probably will load it sometime this afternoon. On January 5th, Friday, I did make a trade, and I mentioned it in my chat group. It's a private chat group, but those in the chat group, I'm sure, will attest that I did recommend a position in Palantir, and I made it. Okay, the order trigger. But let's take a look at this chart, Palantir. When you look at this chart, as in any stock chart, you see movement, gyrating up, down, sideways, you name it. It's all kind of patterns, right? And you can see visually that it is never a straight line up or a straight line upward or a straight line downward. There are zigzags everywhere. You also have, I have here, this is standard for me. I have 20-day, the green line is a 20-day moving average. The blue line is 50-day moving average. The red line is a 100-day moving average, and the yellow line is 200-day moving average. My mentor also used a 10-day moving average. And oh, now that I just talked about this, the system that I'm using right here is Think or Swim. TD Ameritrade, Think or Swim. All right, so if you go to TD Ameritrade, which is, I believe, bought out now by Schwab, it's owned by Schwab now, I believe, Charles Schwab. So, whatever you use doesn't matter to me. I don't care. I just use this because to me, it is an easy system for me to learn. I downloaded. I have TD Ameritrade for a long time. I have had my Roth IRA with TD Ameritrade going back to 2000. Yes, year 2000. But those are long-term investment that I put in there. And then as I start to trade, I downloaded the Think or Swim software to use. So this is Think or Swim platform. I'm not sure what you have, but you can download Think or Swim without having money there. Okay, you can download it and paper trade and have the same platform, but it is a very good platform. It's a little bit cumbersome when it comes down to option trading, but otherwise I don't have any problem with trading in my accounts with TD Ameritrade. But this is Think or Swim platform, okay? And there are a ton of tutorial on what to do, how to use, how to apply anything. Like for me, when I downloaded the software, certainly I had no idea how to add moving average, right? So I had to go on YouTube, watch a couple of videos, and learn how to do it. So it's everything in life. It takes effort, okay? Lazy people can just click off this video right now. I'm here to spoon feed you, but at the same time, it takes effort. All right. And when it comes down to moving average, there will be people that say, oh, there's a better you know, I just use simple moving average. I don't use any other. This is other. Okay, I'm not gonna go into the different kind of moving average, but I'm just saying I use 20, 50, 100, and 200. The day, the duration, 20, 50 is basically tell you how many, going back 20 days, going back 50 days, going back 100 days, and it kind of give you a feel of what the sentiment is of the stock over a short time frame or over a long time frame. So when you look at Palantir right here, you definitely can see that over the past 9 months there have been a big movement. Okay, it was dead money for the first 4 months, and then a big move up. So is it a surprise that the 20-day moving average, the green line, is moving higher? Yeah, until November. Okay, so sure, there was bullish short-term sentiment all the way from May into the end of November, and then since then it has been downward. Okay, so the direction of the lines matters. Okay, the 50, of course, longer period, same thing. Okay, the direction matters. The red line, of course, 100 days is a long time, and no doubt you can see that it's an area. When it comes down to moving average, no doubt the 20 days bullish. Anything over the 20 days tend to be strong short-term bullish momentum, right? So take a look at this. Okay, that's very strong. And then, as with anything, after you have a big strong move, that's a big move. You're talking from 7-ish, a double, more than a double consolidation, right? When you see a big move up and then a sideways movement, sure, sideways can include a little bit of profit taking. It can people in the market will refer to it as consolidation. Okay, so you get big move up, consolidation, resumption, and then of course you have retracement. Okay, pay attention to the word that I'm saying so that you understand the lingo that traders, people on CNBC talk about. You get bullish momentum, consolidation, resumption, retracement. And depend on the stock. Not every stock behave the same way. Some stock kind of ignore the 50, pay more attention to the 100. Some stock, you pay more attention to the 50, less attention to the 100-day moving average. So it depends on the stock. But when you look at a chart, you will see which one matter more. Okay, let me repeat that phrase. You can see which moving average matter more. And from this, what do you think? The 20 should always be something that you pay attention to, because anything above the 20 is very bullish short-term momentum. And then once it breaks that, then you have consolidation. It can be either consolidation, a retracement, or something bigger, a correction, things like that, a breakdown. So if you look at this Palantir chart, what do you see? The 100 is more important than the 50, right? Because it it act as a point where buyers come in to support. Okay, and every time it's breached, there are buyers that come in to support, right? So now we are getting close to that. Now we, of course, once again we break the 100, and we are for the first time getting close to a 200-day moving average, which is usually a good area to buy. Okay, so today I am just talking about moving average, and already the video is 20 minutes. So I'm going to stop it right here, and we will resume the lesson in the next video. But no doubt, whenever you open a chart on any stock, you should have a setup that automatically add 20, 50, 100, and 200. And my mentor also used 10, because on big momentum moving stock as we had last year, like Eli Lilly, Nvidia, he will trade on the 10-day moving average. He will use the 10-day moving average as a stop. And I will explain more about stop in the future video. But for those that follow me, I rarely talk about 10-day moving average, but it is something that I do look at sometime. But I don't really trade the big momentum moving stock that much. Sure, I have some Eli Lilly, I have some Nvidia here and there, but it's not a big part. My mentor, he's big into those big momentum stocks, so he used a 10-day moving average. He's a much better trader than I am. Maybe someday I will add a 10-day moving average. I just try to minimize the clutterness on the screen. For those that follow me and watch my other videos and streams that I have for the past year, a lot of my charts are super busy, right? It's already so much stuff on it. That's why I tend to delete a lot of Fibonacci lines and other things, because sure, I put them on short term to take a look to see what level is interesting to me, but then I remove them because most charts are already too clutters for my eyes. Okay, but you do what you like. Anyhow, thank you for watching. If you find this video helpful, let me know, and keep watching the series, and share the video. Okay, if you find that this is helpful for friends and family, why not? Until the next video, bye bye.